Hey everyone, Michael here. Today I'm going to teach you guys how to set up a trading spreadsheet. This is going to tell you what you're doing right and what you're doing wrong, and then you're going to be able to cut off what you're doing wrong and then just focus on your bread and butter, so to speak. And this is going to drastically improve the amount of money you're making in and bringing in every single week. My goal here on this channel is to make you guys quit your 9 to 5 and go full-time into trading, but that's no easy task, which is why I make all these videos for you. Heads up, if you guys are new, please consider subscribing. But my channel is not as exciting and bravadic as some of those other YouTubers. This is more of a put your head down, do the work, you see the rewards, and you get to all the fun is not in watching the YouTube video, it's in spending the money on whatever you want to down the road. Now, to get started here, guys, first we're just going to put date here in this first one. This is designed so from beginning to end everything's going to be pretty easy. The only exception to that is the actual date right here. So date, and besides that, you're going to have open and close. All right. You don't have to have the open and close if you guys only like to day trade. So if you guys only like to day trade, you guys would only need something in here like, what's the date today? 12/29. You guys would only need 12/29 right there. You guys wouldn't need 12/29 to maybe 30 for one day, for holding overnight. You guys can put whatever you guys want there, but if you guys like to swing trade, you're going to put two dates there, the date you open and the date you close. Moving on to the B tab here, you're going to have the ticker. Let me open this up a little bit more here. And I mean, this one's pretty self-explanatory. It could be Bitcoin, it could be Ethereum, it could be Apple, it could be Microsoft, Nvidia. Whatever it is, you're just going to put the ticker right there. Afterwards, you're going to have a watch list. Now, all the watch list is asking you, hey, is this on your watch list? If you guys use TradingView or TD Ameritrade or E-Trade or Schwab or Robinhood, whatever your platform, is it on your watch list or did you magically just find it out of nowhere? If you just found it, you're going to say, no, it's not on my watch list. If you've been watching it for a while here and you've been kind of understand it a little bit more, you're going to say yes. Heads up, if something's already on your watch list and you've been looking at it about once a week, the chances of you making money on it are drastically improved if you rather than just finding it one day and buying it on the same day you found it. Okay. Now, after that, we have the reasoning. This can be a lot of different things depending on how you guys look at the market. I'm going to say, hey, what's the reasoning here for me? Was it a pattern breakout? Did I see something? What is the reason you're buying this? You could simply say, head and shoulders. Let me open this here. And that's your reasoning, okay? You can say found support. There are a lot of different things here. While you're starting off, say whatever is on your mind. Whatever your reasoning is, just write it out here. That way, when you come back, back over here at the end of the week to kind of review all of your trades, you can see all the reasons that why you bought stuff and what worked out and what didn't. And so you guys can adjust appropriately. Excuse me, guys. Now, after reasoning, we're going to have our price target. Now, price target is simply what price do you think it's going to go to? What price are you prepared to sell all of your position at? If you're buying at, if you're buying Bitcoin at 50,000, are you going to sell it at 60,000, 65,000, 69,000, 70,000, etc.? What's that price target? Where when the price hits that number, you're going to be completely out of your position. All right. After that, we have call put. This is if you guys like to trade options. So if you guys are buying a call or a put, this is what you guys are going to say. You're just going to say call, and that's going to be it. Okay, nice and easy. If it's a put, it's going to be a put. This just keeps in track of, were you buying a put? Were you thinking it's going to go down or up? After that, we're going to have same thing, but a different version for you guys like to hold. This is going to be whether you're going to long or short the position. All right, this is nice and easy. Again, just long or short. It doesn't really matter which way you go as long as you guys are making money. I don't care if you're short. I don't care if you buy puts. I do both myself. Don't fall in love with just the security going up, because most of the time when something really starts going parabolic, you can really short it back down and make an easy profit off of it. Now, one thing here we have is the scale out zones. For now, let's just call them levels. I'm going to move this over here a little bit. Let me see if I can drag that over. There we go. Okay, scale levels. So a lot of times if you're swing trading or you're doing a long-term trade, you want to make sure that you're able to accumulate some profit and take some profit off the table. That way, if the price continues to go up, you're making money, and it's not just unrealized gains. You're actually getting some realized gains in there as well. Let's say Bitcoin, a few days ago, it came all the way down to like 45,000, something like that. If you were to buy there and you wanted to make some money, you could sell a little bit of your crypto off at 47,000, 48,000, 49,000, just making sure some of those gains have been locked in. So these can be 1 level, 2 levels. Sometimes you may not even have these at all. Sometimes you guys may just be day trading and you buy in at a big amount and you sell at a big amount. That's how you guys are going to be making money. You guys don't need to have scale out levels, but I'd recommend it if you guys are doing swing trades or longer term trades, especially in options where the prices and the price can be moving very fast. Where you might be up 100% one day, down 50% the next day. Things can be very wild. You want to make sure that you're prepared for that, especially in this world of Omicron and COVID, where the markets are all over the place. Right after that, in the I tab, after scale out levels, you're going to have a stop loss. Now, probably the most important tab on here, to be honest. If the trade does not work out, when are you going to sell? This will stop you from becoming a bag holder, okay? If you trade with leverage or you trade options, things can go down south pretty darn fast, and especially even if you're day trading, things can go down really fast. So you need to have a price in there where you're saying, hey, if the price drops down this far, I'm going to lose money, I'm going to accept it, but I will not be caught as a bag holder and I will still have money to trade later on. When people don't have stop losses, that's how they lose everything on crashes. That's how they lose everything. Have a stop loss, it will protect you, and this keeps you in the game a lot longer, especially when you guys are new. Most people, when they're new to trading, they eventually lose their first investment and they have to put a little bit more money in there, and then they learn from that rough experience. I'm trying to stop you from having that rough experience in the first place. I went through it. A lot of people I know went through it. It's just part of life. But if I can help you guys save some of that money, especially in this kind of turbulent times, I'm going to do that. So make sure you guys have a stop loss. That stop loss may be down, maybe at a critical breakdown point. It may be just 5%, or may just be at your risk tolerance level. A lot of people like to do 5 to 10% stop losses just because that's how much they're willing to lose on that particular investment. Next, this is optional for some of you guys. So this is going to be leverage. So sometimes I trade leverage when it comes to crypto. I don't necessarily do it in the stock market, but I do it in the crypto markets because it's very easy. I have a link down below for an exchange called BitGet, which is very good with leverage, and they have paper trading to kind of assist you to learn how to go full-time in trading with leverage, because leverage is very risky. If you guys do trade leverage, all you're going to do right here is, if you're trading with 10x, you're just going to do 10x, right? If you're trading with 1x, just do 1x, okay? Most of you guys, again, if you don't have any leverage, you can just put a 0 here or just a 1. Most people are probably going to be trading with 5x leverage on crypto, maybe up to 10. The max on BitGet is 125x leverage, which means for every percent that Bitcoin goes up, I'm making 125% returns. For every percent Bitcoin goes down, I'm losing 125%, which is why leverage can be so freaking crazy. Now, for now, let's just say 10x, because that's kind of the standard of what a lot of people are doing these days. A more responsible number is probably 5x if you guys are new, but 10x is okay if you guys are looking to have some fun day trading and kind of just learning while spending your own money. Now, after leverage, we're going to have profit loss. So at the end of it, did you make money? Did you lose money? One can be 500. The other one can be down, 400. Another one could be up 200. You're going to notice a lot of fluctuation as you guys are new traders. Over time, this is going to, end up consolidating a little bit more, and you guys are going to have a lot more green than red. But right now, since you guys are new, it may be all over the place, to be honest. It's just the way you're trading. Some of you guys have been going to Discord gurus. Some of you guys have been trusting some of those YouTube personalities that kind of give you a lot more hype than, educational content. It's fine. They're very entertaining. I grant you that. But you may notice that you're not making life-changing amounts of money, right? So keep track of your profits. And if you do have a green day, you can just click on this right here. Click on the little tab. You go right here to fill color, and you can choose a color. Now, for me, you can go bright green. I think it looks a little too bright for me. So what you might want to do is just go over here to one of these faded greens. So something like that. And that lets me know, hey, that was a good play. On the other hand, I can come down here and I can do a faint red on top of that. and that lets you know, hey, this was a loss. Okay, so you don't actually have to have that 400 here. You could do like that, $400 loss, $500 return. Okay, and this one right here was $200 return, so I can do another green one like that. Okay, nice and easy. Don't lie to yourself. If you make money, record it. If you're losing money, record it. Because what will happen here is over time, you guys are going to see, hey, you're going to look at the reasoning and then the profit loss. And you're going to find a pattern here in your own trading. Everybody's pattern is completely different, guys. Everybody's pattern is completely different. But it will tell you what makes you money and what is not making you money. And there's a simple fix to that. Stop doing what's not making you money and then start doing more of what is making you money. And then from there, you're going to try out different things. You're going to add different experiments here, and those will go into your reasoning tab right here. And then you're going to see if that works out. You can start doing more of that. If stuff is working out for you guys can confidently put more money into those positions and get more money out of those returns, okay? And, that'll help you out a lot. And the last big one here is notes. Let me scroll this over just a little bit. This tab is usually pretty wide for most people. It's going to be pretty wide for me. Basically, all notes is this is telling you if you have any notes of why something didn't work out, you're going to write them down here. So over the past few weeks, I wanted to buy Aflac. Now it's popping off, and it broke out a couple days ago, but it was a false breakout. And the reason it didn't actually perform to my my expectations is because of the Omicron news coming out and that really crashing the market for a few days. So I can say, let me put it right here for this loss. I lost $400 because Omicron variant caused market scare. Okay. It could be as simple as that, saying Omicron variant caused market scare. That way you know, why did you lose money? That way you know it's not actually the pattern breakout that I was looking at. It wasn't the breakout. What was wrong was I didn't foresee an Omicron variant kind of breaking out into the world stage. Sometimes you can't really do things, but on other things you say, hey, what's a note you say? You might have held too long. Held too long. Maybe you could have made $900 profit, but you held on to those options just a day too long, and from $900 it went down to $500. Stuff like that. If you notice anything, you're going to write it in your notes. And again, try to keep these consistent. If you say held too long on one thing, next time you hold too long, just say held too long again. That way you can keep track of all the information. And then later on you can see, hey, I'm holding too long on this particular stock. I'm holding too long on this. You're going to be able to put this data together, and it'll tell you a story about how to make more money for yourself. Okay, guys? I hope that was pretty easy to watch, guys. I hope you guys have a fantastic rest of your day. If you guys can please subscribe to the channel, I would really appreciate it. Have a wonderful rest of your day, everybody. And hopefully this will help you out. And if you guys have any questions whatsoever, please ask them down below in the comment section.
Talk to me nice, talk to me honestly.